Hey everybody, it's Justin here again with another Mortgage Minute. So today's topic is tax benefits of homeownership. Do you ever wonder why your CPA says, hey, you should buy a house? I get CPAs that refer us business all the time. The clients go in there and they tell them you need to buy a home. You make too much money basically. So whether you're a first-time home buyer or somebody who's already owned homes and you're buying another home, this is some good information that you still might want to know. We all know that home ownership creates wealth through a couple different ways, right? One is appreciation. If you look at any 10-year window in real estate, you'll see prices increase about 35. They typically double every 10 years, a minimum, 35%. And that's with bubbles and crashes in between those 10-year windows. If you look at home prices from 1990 to 2000, they're 35% to 50% higher. From 2000 to 2010, and in both periods, we had bubbles and crashes. So in 2000 to 2010, we had a huge bubble and a huge crash. But if you look at the prices from 2000 to 2010, they're still about double. If you look at the prices from 2010 to now it's 2018, this current year, prices are, I think, about 30%, 35% more, right in that range. They've already hit where they were at the bubble and kind of past it in some areas, depending on where. But overall, real estate appreciates, and that's one way to build wealth. Somebody who bought a home, 2 years ago right now, from in my market in Southern California, I'm seeing a lot of them have anywhere from 50 to 150,000 plus in equity just in a couple years. So you have appreciation. It's an appreciating asset. There is almost no other appreciating asset like a home is. So that builds wealth right there. The second part is principal pay down. So when you make your payment every month, you're paying down the balance of the mortgage. So it's like a forced savings. But then there's the part that goes to interest, right? So here's the beauty. Tax benefits. You get to deduct the interest on your primary residence home. So if you're a first-time home buyer, you got to ask us, and we can break down exactly, even if you're not a first-time home buyer, we can break down exactly how much you can expect to get back every year based on your income, based on your marital status, how you file your taxes, the tax year. We could calculate all that for you, and I can tell you, yes, Johnson family, you guys are going to get back an extra $7,200 a year on your tax refund that you aren't getting right now. It's beautiful, right? A lot of people don't realize that you're going to get a big chunk of that interest back, and you can deduct the property taxes as well for the most part. So, and sometimes the mortgage interest, the PMI, the mortgage insurance, if it's there. Not everybody can, so that's another topic you got to ask me specifically on. But you deduct a lot of this stuff, and at the end of the year, if you're somebody that normally gets back, $1,000 or doesn't get back much, you're going to get back a big chunk more because of home ownership, right? Somebody who maybe owes every year, again, that's going to reduce. So there's a big chunk of the interest you pay that you're going to get back at the end of the year because of the write-offs you have on the interest and the taxes. So something most people don't know about is I've actually done calculations with financial advisors on this tax benefit. And if you actually put that money that you get back every year into like a bond, a mutual fund, something like that, that averages maybe 5%, 6% a year, over the course of 30 years, I've seen the projections on those accounts equaling easily $300,000, $400,000, $500,000. So in 30 years, not only do you pay off your home, not only can you count on your home price being, almost triple, if not minimum double, a good chunk more. You have that big nest egg now, and on top of that, if you're smart with the tax benefits that you get and you reinvest them, and you talk to us about some of those reinvestment strategies, you could have a whole other vehicle towards retirement at that time in 30 years, another $300,000, $400,000, $500,000. It just depends. Every situation is different. It depends on your price point. It depends on your tax bracket. It has to be a primary residence. So there are some awesome strategies on how to create wealth above and beyond the appreciation in the property itself, but actually using the tax benefits to build a whole nother nest egg for yourself. So if you guys have questions on that, let me know. It's a super awesome topic that I love to get into, and I'd love to show you that. It's just specific, to everybody's individual situation, but it's something you might not have known and something I wanted to talk about. Anyways, have a good one, and I'll talk to you soon. Thanks.